The Reserve Bank warns that it's on high alert for inflation, and that could mean another rate rise next month. More Aussies repatriated from Israel as US President Joe Biden prepares to visit the country, and the world's top luxury brand struggles for growth, pushing its owner down the rankings of richest people. Welcome to Fear and Greed Business News, Australia's best business podcast. It is Wednesday, the 18th of October, 2023. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you are talking all about e-commerce. You're speaking with Paul Waddy. This is an interview to stick around for.
Yeah, it sure is. Paul is a strategic advisor to brands selling online. We talk about how important Black Friday and Cyber Monday and that period around that has become for online sellers. In fact, it's more important. November's become more important than December, and certainly more important than January. This is the online e-commerce world we're talking about. Is it a good thing that online sellers are so reliant on Black Friday and Cyber Monday? Paul doesn't think so. Well worth a listen, this one.
Yeah, it's a good one. It's coming up a little bit later on. The main story, though, this morning, Sean, an interest rate rise in 3 weeks' time when the Reserve Bank Board next meets is a live option, with the central bank having little tolerance for inflation.
Exactly. The minutes of the Reserve Bank Board meeting that was held a couple of weeks ago, but released yesterday, show that any unexpected strength in inflation could force a rate rise. The statement said the board has a lower tolerance for a slower return of inflation to target than currently expected. Reading between the lines, economists said it meant a rate rise is very possible at the November meeting. The Reserve Bank expects inflation to return to its 2 to 3% target band in 2025. In fact, it's late 2025. But if there's any slippage, then expect a hike. The pivotal data point is the inflation numbers from the Bureau of Statistics, due for release on October 25, a week's time.
So looking at it all, Sean, what is the Reserve Bank actually most worried about in all of this?
Wages growth. In many service areas, think hairdressing or restaurants, those sorts of places, core inflation remains persistently high, and that's because people are getting paid more. People need to pay staff more to actually get staff. So this whole higher wage issue is pushing through to higher prices. It's not really surprising given how low the unemployment rate has been. It's under 4% still. Also, oil prices are rising again, and that will feed through to inflation both directly and indirectly. We talk a lot about underlying inflation, which takes the oil prices out, and headline inflation, which includes it. But even the underlying stuff that takes oil prices out, oil prices have an indirect effect. You know, if you've got to pay more for your transport, we don't think of it as oil prices, but it still pushes prices up. So very important that. Among economists, few think that there will be a rate rise next month, notwithstanding what happened yesterday, but plenty think there's one more in the offing at some point over the next 12 months or so. Now, Michael, I thought we'd better put some context around this. We might all be feeling the 4 percentage point rate rises in the past 17 months, but local rates are actually relatively low. Official rates in the US, in Canada, in the Euro region, in the UK, certainly in New Zealand, all much higher than here in Australia.
I always enjoy your explanations of economic things,
Yeah.
Sean. Yeah, I do. It wouldn't surprise me if one day a university just tapped you on the shoulder and said,
Yes.
Welcome aboard, Professor Aylmer.
Oh, wouldn't that be nice, eh?
I reckon you'd look good in tweed.
Certainly I've forgotten
the
elbow patches. Yeah, the elbow patches. And I've got the Birkenstocks already. So, look, I think I would probably look okay. Slight issue is I think I'm more of an everyday economist as opposed to an academic economist. I think that's fair to say.
Oh, plus you're no good at hacky sack, so you wouldn't survive on campus, would you?
No, perhaps not.
Do they still play hacky sack?
Yeah, I don't know. I doubt it.
It feels a little bit like we're going off on a tangent here. Local markets, how do they perform yesterday?
The S&P ASX 200 closed up almost 0.5% yesterday to 7,056 points. Got to be much better. It started the day really strongly, but then it fell back from late morning. CSL bounced on Monday. Not yesterday. It was down 1.5%, the worst of the large caps. Wesfarmers, Woolies and Coles also ended lower. So too did Transurban. Otherwise, the other 20 of the top 25 stocks rose. James Hardie and QBE were among the best. The iron ore miners have had a better few days, reflecting higher prices for that commodity. Rio Tinto and Fortescue both ended up more than 1%. Goodman Group plus tech leaders REA, WiseTech Global and Xero, they all did pretty well too. Just a bit of corporate news around shares in Cochlear fell nearly 1% after the hearing implant group said that its previous earnings guidance did not factor in costs from a major planned acquisition. Investors don't like hearing that. Auto Parts Group Bapcor tumbled 12%, the worst of the top 200, after flagging that its year-to-date revenue growth had slowed down to a low single-digit percentage rate. And Hub24 is up nearly 2% after its total funds under administration jumped more than 20% in the September quarter.
And what about international markets?
Well, oil's come off a bit, so too gold, but prices are still relatively high. The Aussie dollar is trading around 63.5 US cents. Kind of some fun going on in crypto land in the past couple of days. Well, I'm not sure whether fun's the right word. Bitcoin had a bit of a run. It jumped 10% to be worth more than $30,000 US a unit. But it was all on the back of fake news, so to speak. There was a report that BlackRock, the massive fund manager, had won the right to launch a crypto ETF, exchange-traded fund. Now, at the moment, the US Securities and Exchange Commission, the regulator, is considering whether or not to allow ETFs to invest directly in Bitcoin. The news that BlackRock had won the ability to do that pushed up the price, but it wasn't true. Anyway, the price has come back since then. It's now trading around $28,100 US a unit.
All right, we'll be back in a moment with the rest of the day's business news. Sean, to politics first. The wash-up from the voice referendum continues with attacks from both sides of Parliament on the other.
The Prime Minister says the government is starting a process to look at false and misleading political advertising, citing an example of a deceptive ad that ran during the referendum campaign. Opposition leader Peter Dutton in Question Time asked Albanese whether he remains committed to implementing the Uluru Statement from the Heart in full. That's a bit tricky, given the referendum failed.
Meanwhile, Sean, billions of dollars could be spent to increase the number of Australians trained in areas of high demand, including things like clean energy or the care sector and digitisation.
The Albanese government could spend $12.6 billion under the 5-year National Skills Agreement, which comes into effect from January after a deal was struck with National Cabinet on Monday. The Prime Minister said the agreement would mean more workers with the skills the economy needs.
The repatriation of Aussies in Israel is continuing with a Qatar Airlines flight arriving in Sydney last night.
The Qatar Airways flight is the first dedicated service flying Australians home from the conflict zone, arriving ahead of a Qantas flight that will leave London this evening and stop in Dubai. That's also bringing home Australians fleeing Tel Aviv. Other Australians have left the region aboard Etihad commercial flights or been rescued by Canadian Defence Force flights. Deputy Prime Minister Richard Marles said yesterday morning that the government had helped about 700 people leave Israel, just under 600 of whom are Australian. The Qatar flight forms part of these efforts. 45 Australians, though, do remain trapped in Gaza.
Sean, this is an interesting one. Telstra, with its 1 million plus shareholders, held its AGM yesterday, and new director Maxine Brenner, who's also on the Qantas board, was hit with a 17% vote against her election. You'd have to have a thick skin, wouldn't you?
You would. Now, that's a very large vote against a new director. Another director was up for membership of the Telstra board, and that person ended up with 99% vote. That's a long way in front of Brenner, who ended up with 83%. Now, of course, she still joins the board because it's less than 50%. The reason why people voted against her is interesting. A proxy firm, Institutional Shareholder Services, which advises shareholders on voting at annual general meetings, recommended voting against Brenner because of how she handled corporate governance issues at Qantas. Now, it's interesting that we're seeing what happened at one large company flow through to how people think a director will perform at another. Obviously, the Telstra AGM is a pretty big event. The company said it had decided not to sell its infrastructure business because interest rates and inflation had risen. It defended its decision to support the yes vote in the weekend's referendum. And Chair John Mullen said satellite technology will change the telco industry, particularly in regional areas.
National Australia Bank and Commonwealth Bank have switched on a new identity checking service called Connect ID, which will allow companies to use banks for information about customers rather than gathering it themselves.
Okay, this is a bit pointy-headed, but it's really, really important.
It's a little bit ominous, Sean, when you are warning that something is a bit pointy-headed.
Yes, true. No, I've got to thank the Financial Review's James Ayres, a magnificent journalist, to thank for this story. He kind of can explain this stuff better than anyone I know. The idea is that rather than companies storing information and risking a cyber attack, think Optus last year, the banks will charge other businesses a fee to validate credentials of customers. That way, those other businesses don't have to hold on to those customer details, therefore, no information to be hacked. It's called a reusable digital identity and will become an incremental revenue stream for the banks. Now, banks will compete with government identity providers such as MyGov in this business. National Australia Bank and Commonwealth Bank are already in. Westpac and ANZ support the regime. They're expected to join it in coming months. Initially, demands expected from small businesses. So can you imagine if you're a small business and you've got to take things like driver's license and birth dates and that type of thing? The last thing you want is to hold on to that and be hacked. So the idea is that it's like a fee for service within banks. You don't have to hold on to it. I think it's a great idea, don't you reckon?
Look, I completely agree. I'm sure that NAB and CBA really care what I think, but I reckon it's a cracker.
I do. I'm just excited about it. I think that taking the pressure off so many small businesses and other businesses in terms of holding on to that detail, good thing.
Especially the kind of weight of responsibility that is on small business operators to ensure that their cybersecurity is right up there. It does just reduce a little bit of that pressure.
Yeah, I mean, it reduces a lot of that pressure if they're not holding on to personal details of customers.
Yeah, absolutely. Wow, good story. Now, Sean, the beleaguered PwC Australia is running into problems in the US, with that country's audit watchdog now investigating the tax leak scandal after the Aussie firm was more than a year late in self-reporting the matter. Sean, this is not going away.
Oh, it just keeps giving, doesn't it? Jan McKay, the local firm's chief risk and ethics leader, told the Senate inquiry into consultants that the firm had, unfortunately, missed the statutory 30-day deadline to self-declare reportable events to the US Public Company Accounting Oversight Board. Not a good look for PwC locally or internationally. Of course, the scandal involved a former partner sharing confidential information with PwC personnel, which was then used to help clients avoid tax.
Sean, the Women's A-League football competition started last week and the men's starts this week. So I'm positive, in fact, that head office is delighted that one-time glamour club Perth Glory has a new owner.
Yes, it's been quite a saga. Perth Glory fell into receivership and its licence was revoked in July this year after former owner, West Australian businessman Tony Sage, was unable to find new investors. A search for a new buyer has been running for a few months. It's expected to be purchased by Melbourne property developer Robert Bree, according to media reports. The terms of the deal are unclear, but it typically costs between $50 and $60 million to fund a club over a 5-year period, according to those reports. Assuming the deal goes ahead, it will be a weight off the A-League's shoulders because at least they'll have owners for all the clubs.
Yeah, which feels like it's kind of the base requirement, really, isn't it?
You'd think so.
Now, turning to international news now, President Joe Biden will travel to Israel tonight in a visit designed to signal US solidarity with the country and help prevent conflict from fully engulfing the region.
It comes after the US brokered a deal with Israel to develop a plan together to enable humanitarian aid from donor nations and multilateral organisations to reach civilians in Gaza as soon as possible. US and Israeli leaders have also discussed the possibility of creating safe zones for civilians ahead of Israel's promised land attack on Gaza. Meanwhile, Iran's foreign minister has warned that preemptive action is possible if Israel moves closer to its looming ground offensive in the Gaza Strip. And the Israeli Air Force says it has struck Hezbollah targets in Lebanon, that's the other side of the country, in response to fire towards Israel. Israel's army said on Monday that it was evacuating residents close to its border with Lebanon to allow for potential military action.
So isn't that interesting? You've got President Joe Biden traveling to Israel, and it's all really about the symbolism, isn't it? It's so important, the messages that these kind of visits send, because at the same time, you've got Russian President Vladimir Putin arriving in Beijing yesterday to meet Chinese counterpart Xi Jinping. And that trip is aimed at showcasing the mutual trust and partnership between the two countries. So again, more symbolism.
Absolutely. It's the Kremlin chief's first official trip outside the former Soviet Union this year. Putin has hardly travelled abroad at all since the Hague-based International Criminal Court issued an arrest warrant for him back in March, accusing him of illegally deporting children from Ukraine. Now, Putin has visited former Soviet Republic Kyrgyzstan earlier this month, but that International Criminal Court move obliges the 123 member states to arrest Putin and transfer him to The Hague for a trial if he sets foot on the territory. Needless to say, China isn't a member of the International Criminal Court.
Okay, something a little bit lighter to finish on, Sean. It's always a good time to check in on the richest people in the world. There's certainly never a bad time to do this. Bernard Arnault has lost his spot as the second richest person in the world, as a sell-off in luxury stocks pushed his net worth below that of Amazon's Jeff Bezos. Now, interestingly, Sean, I was doing some reading about Jeff Bezos yesterday and how many different pronunciations there are around his name. And in the end, you have all of these business journalists around the world going, we don't know how to say his name. And they all refer back to, there is one little piece of audio from 2013 when he introduced himself in a video on the Washington Post website, which he owns, the Washington Post, in which he refers to himself as Jeff Bezos.
Bezos. Well, if he said Bezos, I'm going Bezos.
Yeah, good enough for me.
Yeah, anyway, back to Bernie Arnault. He's founder and CEO of LVMH, the luxury powerhouse. His wealth has fallen about $7 billion in the last week. That's when the company reported softer sales growth. Now, Arnault is worth around $155 billion now, below Bezos's $156 billion. Of course, Elon Musk of Tesla and X fame is number one. He's worth close to $240 billion. That's just phenomenal how much more he is worth than anyone. He's worth 50% more than Bezos. Anyway, while Arnault's wealth has fallen on the back of sluggish sales, particularly in the US and China, Bezos and Musk have benefited from a recovery in tech stocks. In fact, Musk added almost $100 billion this year to his wealth on the back of Tesla shares jumping more than 100%. Bezos' fortune has increased by about $50 billion this year. That's because Amazon stocks jumped by about 58%.
They're just extraordinary sums, aren't they?
Just ridiculous amounts of money.
It is a little bit. All right, up next is the Fear and Greed Daily interview. You're speaking with Paul Waddy, founder of learnecommerce.com.
All about whether the Black Friday, Cyber Monday sales and what they mean for e-commerce companies is actually a good thing in the long term. Obviously, very, very popular with consumers, but Paul's not so sure they're that good for e-commerce companies.
Yeah, it's coming up next in the Fear and Greed playlist or at fearandgreed.com.au. And Sean, today is, of course, Wednesday, so it means there is a new episode of How Do They Afford That out today, our sister podcast. And I do this one with Canna Campbell, financial planner and the founder of Sugar Mama TV. A very serious topic today, and it actually kind of feels a little bit obscene almost going from that story about Bernard Arnault and Jeff Bezos. The topic today on How Do They Afford That is what to do when you run out of money, because the cost of living crisis is affecting a lot of people, from kind of your power bills and your grocery bills and interest rates and rent soaring as well. And it is actually hitting people hard. And there comes a point where some households, some families, some individuals just run out of money. And so this is a conversation basically about what do you do then? When you're at that point of desperation, what are the options available to you? So it is a really important conversation. It is in today's episode of How Do They Afford That? I'll put a link in today's show notes and you can find that one wherever you listen to podcasts as well.
I look forward to that one, Michael. It is quite a serious issue. So I'm fortunately, I'm not in that position, but many people are.
Yeah.
And so I think it's very important.
Yeah, it's quite confronting when you get into it. All right, there we go, Sean. Thank you very much.
Thank you, Michael.
It is Wednesday, the 18th of October, 2023. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X and Facebook. I'm Michael Thompson and that was Fear and Greed Business News. Have a great day.